All right, you're welcome to my channel. This is Nixon Capital. Today is 15th of March 2026. Okay, we just opened for the new trading week. This week we are looking at this structure on Euro USD. Price is currently resting in that demand zone, and we are looking forward to buy this currency pair from this level, and we're targeting this high. Okay. At Nixon Capital, this is what we do. As usual, we're trend continuation traders. Like when we see market breaking structures to the upside, we want to catch the market at discounted prices and continue higher. And the same thing applies to a bearish mode. When we're trending downwards, we want to catch price at premium prices and continue lower. And currently, with this structure on Euro USD, at Nixon Capital, we trade with data, time, and order flow. And the data represents or refers to the kind of, let me say, swing highs and lows that maybe the data that was responsible for price pivoting. Okay. And the time closely aligns with the data. We want to check the time that the data came in, and order flow refers to the market structure. Either we are in a bullish mode or we are in a bearish mode. So with this our structure on Euro USD, it correlates with GBP USD. Okay. When you look at this swing low, that was I think on the 1st August of 2025, right? The same thing applies to Euro USD, 1st August 2025. And with Euro USD setup, you can see this gap right here. And this is what we do at Nexon Capital. When we get an impulsive or when we get a pivot in price with a gap, we want market to pull back, give us 100% fill of that gap and continue high. That is where we want to catch our discounted prices in a bullish mode. Okay. So we having this swing low aligning with GBP USD swing low. It tells us that this swing low is a USD related swing low. So we go to Forex Factory to find what actually caused price to pivot from this price level and continue the higher. So when we look at Forex Factory on 1st August 2025, it was on Friday. Okay, it was Friday, 1st August 2025. It was NFP that came in. Market was actually expecting 106,000 jobs, but the US economy had 73,000. It was lower than the 100. It was lower than the expectations. But I'm going to provide a full video on how to read these economic data. Let me say the labor market, the inflation reports, and central bank remarks. Okay, so with these figures that you see right here, this is not what the market was actually paying attention to. Okay, this figure is just a preliminary figure, but when you open the report, market is always interested in the revisions of the 2 previous months inside. And with this report, I think I've opened it here. When you look at the report, we have 250 with employment in May and June combined is 258,000 lower than previously reported. This is what is much more important for the Federal Reserve when deciding on interest rates direction. And this is what major players in this FX market also pay attention to. So what this tells us is that market, when we had that data, market is actually pricing in a dovish central bank or a dovish Federal Reserve, because the market saw that the US economy is losing jobs, much more jobs. So it is going to be urgent for the central bank to lower interest rates to support the economy. Okay, so we had investors trying to prefer the euro over the dollar because they've seen that in the near term there is going to be they were going to have a dovish central bank or a dovish Fed, and we had this also sustained move right here. So whilst we're coming along the way, we have to pay attention to the labor market. Okay, we have to pay attention to the labor market. We have to find out if the labor market is still deteriorating. It is going to reinforce the decision that was made by the market at this price level. And with careful review, we have the US economy losing 249,000 jobs. It is much closer to the 258,000 that we had initially. So that is going to reinforce the Federal Reserve to be dovish in the near term. But mind you, with this impulsive move that is coming down, currently the market is in a risk-off mode. Yes, last week, I think the week opened here, 2nd March. Yeah, we had, I think the weekends before the 2nd March, Monday, we had US and Israel attacking Iran, and there's been that geopolitical tension in the Middle East right now, and there's a spike in oil prices that is leading to market fears, and market is shifting to preparing safe haven currencies, which the US dollar is packed. So currently the market is in risk off mode. But at Nexon Capital, we don't pay attention to geopolitics. Yes, that is what we do, because the geopolitics doesn't give you the real directions of the market. You can get an impulsive move right here, and the move is going to be muted over time, like within a short period of time. That is the reason why we don't pay attention to geopolitics. So with Nixon Capital, or at Nixon Capital, what we care about most, sustained trend, is what we are doing right now. We look at interest rates expectations, or central bank expectations, based on relevant economic data, and the NFP, or the employment report, is one of them. We have the CPI, central bank officials' remarks, central bank decisions. These are the data that gives clues into future rate expectations, and that is what currency market is always attuned to. So without wasting much time, I would like to end the video here. In my next videos, I'm thinking of preparing a video on how you guys can read and understand these economic data for yourself, for you to be able to place trades or take profitable trades for your own self. All right, so this is Nexon Capital. See you in our next video.